Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Conocophillips' annual report. Conocophillips is a leading energy company that provides a wide range of businesses and services across various segments. The company's portfolio includes exploration, production, transportation, and marketing of crude oil, bitumen, natural gas, liquefied natural gas, LNG, and natural gas liquids. The company operates in 5 key segments: Alaska, Lower 48, Canada, Europe, Middle East and North Africa, and Asia Pacific. This global presence allows Conocophillips to serve a diverse range of customers across the United States, Canada, China, Equatorial Guinea, Libya, Malaysia, Norway, Singapore, the United Kingdom, and internationally. The company's services include unconventional plays in North America, conventional assets in various regions, global LNG developments, oil sands assets in Canada, and an inventory of global exploration prospects. This comprehensive range of businesses and services positions Conocophillips as a major player in the energy industry. Conocophillips' stock price has increased by approximately 15.69% over the past year due to several key events and strategic developments. One major factor was the successful integration of Marathon Oil's assets, which resulted in over $1 billion in synergies achieved in 2025. This integration strengthened the company's operational efficiency and market position. The company's focus on cost control and capital efficiency also boosted investor confidence. Conocophillips announced plans to reduce capital and operating costs by $1 billion in 2026, building on synergies from the Marathon Oil acquisition. Additionally, the company reaffirmed its strategy to return 45% of its cash from operations to shareholders through ordinary dividends and share repurchase programs. The advancement of Conocophillips' liquefied natural gas (LNG) projects, including participation in significant projects in Qatar and Texas, also contributed to the stock price increase. This expansion into LNG aligns with growing global demand for natural gas as a transition fuel. Furthermore, the company's asset portfolio optimization efforts, which included disposing of $3.2 billion of assets in 2025, further optimized its portfolio and maximized return on invested capital. Positive analyst sentiment also played a significant role in Conocophillips' stock price increase. Numerous Wall Street analysts issued buy or outperform ratings for the company and raised their price targets, often citing the company's strategic initiatives and overall strength in the energy sector. While the company's fourth quarter 2025 earnings missed analyst expectations due to weaker crude prices, the broader positive sentiment over the year was sustained by Conocophillips' strategic growth, cost management, and commitment to shareholder value. Conocophillips' market capitalization of $134 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Conocophillips holds a significant advantage in their industry. Conocophillips trades at a higher price-to-earnings ratio of 17 times and a higher price-to-book ratio of 2.07 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 47% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The company has continued buybacks despite weak revenue growth, raising questions about capital allocation priorities. The company have a dividend yield of 3.09%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The net income of a company underwent significant changes between 2024 and 2025. In 2025, the net income reached $3.8 billion, marking an increase from the previous year. However, it is essential to note that the comparison with 2024 is not directly comparable due to pro forma adjustments. The reason for this increase in net income can be attributed to various factors, such as changes in market conditions and regulatory requirements. Despite the rise in net income, profit margins experienced a decline. This decrease in profit margins was a direct result of the increase in net income. In 2024, the company's total revenues and other income were $677 million. However, due to pro forma adjustments, it is challenging to provide a direct comparison for both years. Nonetheless, it is clear that the increase in net income led to a decrease in profit margins, indicating a shift in the company's financial performance between 2024 and 2025. Conocophillips reported a positive operating cash flow of $14.1 billion in its fiscal year ended December 31, 2025, indicating an improvement from the previous year's operating cash flow. This increase is a significant indicator that the company is generating sufficient funds to cover its operational expenses and invest in its business. The company's revenue also saw a notable growth of 12% to $123.4 billion, driven by its largest segment, exploration and production, E&P, which accounted for approximately 70% of revenue. This strong financial performance suggests that Conocophillips is well-positioned to continue generating positive operating cash flow in the future. Overall, the company's ability to generate positive operating cash flow is a testament to its efficient operations and effective management practices. With a comprehensive risk management program in place, Conocophillips is well-equipped to navigate various risks and challenges in the industry. The company's debt level has undergone some fluctuations over the past year. According to the extracted summaries, the total debt balance decreased from $24.3 billion in 2024 to $23.4 billion in 2025. Additionally, long-term debt also saw a decrease, dropping from $23,289 million in 2024 to $22,424 million in 2025. However, it is worth noting that the company uses a fair value method to measure its debt, which may have contributed to the slight variations in debt levels reported. Despite these changes, there is no indication of any significant increase or decrease in interest expenses. The lack of information on this aspect suggests that the company's interest expenses remain relatively stable over the past year. The acquisitions and divestitures of Conocophillips are notable aspects of its business operations. In terms of divestitures, the company made a significant move in April 2012 by separating its downstream business into an independent, publicly traded energy company called Phillips 66. This separation marked a major shift in the company's structure and operations. In addition to this major divestiture, there is also mention of the Atlantic Methanol Production Company, LLC, AMPCO methanol plant being offline, which could potentially lead to future sale or restructuring. However, it appears that Conocophillips has not made any significant acquisitions in recent years, with no specific mentions of such transactions in the provided summaries. The company has demonstrated a commitment to returning value to its shareholders through both dividend payments and share buybacks. In 2025, the company paid out significant amounts in dividends, including a cash dividend of $1.38 per share and ordinary dividends of $3.18 per share. Additionally, the company received $1.531 billion in dividends from affiliates. The company has also been actively buying back shares, with a total of $39.3 billion spent on 486.1 million shares since 2016. In 2025 alone, the company repurchased $5 billion worth of shares, marking a decrease from the previous year's $5.5 billion. These efforts demonstrate the company's focus on maximizing shareholder value through both dividend payments and strategic share buybacks. Concerns about inventory buildup or supply chain disruption exist. The extracted summaries reveal concerns regarding inventory buildup and potential supply chain disruptions. According to page 20, there is an estimated excess of current replacement cost over LIFO, last in first out cost of inventories, amounting to approximately $65 million and $113 million at December 31, 2025 and 2024, respectively. This discrepancy suggests that the company's inventory valuation may be overstated. The high value of inventories valued on the LIFO basis, as mentioned in page 40, further supports this concern. The values for 2025 and 2024 were $609 million and $578 million, respectively. While these figures are not inherently alarming, they do indicate a significant investment in inventory that may be subject to fluctuations in market value. Fortunately, the report notes some level of mitigation for Montney operations on page 5, suggesting that the company has taken steps to address potential supply chain disruptions. However, this does not entirely alleviate concerns about inventory buildup and its associated risks. That concludes the financial summary for Conocophillips. Feel free to comment below, and I will be happy to answer them when possible.